In this video, we're going to discuss the 5 tests that are used to determine whether a lease should be classified as an operating lease or as a finance lease. So if you remember, with the new lease standard, all leases that are longer than 1 year in length need to be capitalized. That means that the lessee is going to recognize an asset, a right of use asset on their balance sheet, and then they're going to recognize a liability for the lease payments that they have to pay. Okay, but then the question is, well, how do we classify this lease? Because even though we know that, okay, we have to book an asset, we have to book a liability, there's still 2 different types of leases, and it can affect what the income statement effects are, right? Whether we're recognizing interest expense or an amortization expense or just a lease expense, right? And I'll talk about that, the accounting, a little more in a future video. But for right now, we just need to focus on how do we classify, how do we even know what is a finance lease and what is an operating lease? Now, conceptually, the idea is whether ownership has been transferred from the lessor to the lessee. Has ownership or control been transferred? But that's theoretical. So we've actually got 5 tests that are determined, or that are used to determine whether or not it's a finance lease or an operating lease. Okay, so basically think about it like this. If the lease is non-cancelable and just one of the following 5 tests is met, then it's going to be classified as a finance lease. So let me discuss the 5 tests to give you an idea how they work. So transfer of ownership test basically says, look, if by the end of the lease, the legal ownership of the property, the asset that's being leased, has been transferred to the lessee, then in that case, we need to classify it as a finance lease, because then clearly ownership or control is being transferred from the lessor to the lessee. Also, if there is a bargain purchase option on the lease, for example, if the lease is set up in such a way that it says, let's say you're leasing a truck and you lease it for 5 years, and it says, well, at the end of the 5 years, you can buy the truck for $200 from the lessor. It's like, well, obviously you are going to exercise that. That's a bargain purchase. It's just some kind of thing thrown in at the end of the lease and says, hey, look, you could have the asset from the lessor to keep for next to nothing. So we call that a bargain purchase option. And so if there is a bargain purchase option, it's clear that, okay, probably the lessee is going to exercise this option. Then we would say, okay, this is going to be a finance lease. Also, we can look at the lease term. We can look at the length of time and say, okay, look, if we look at the remaining economic life of the asset, of the property being leased, whether it's a truck, a building, a machine, and we could see that the lion's share, a major part of that asset's remaining economic life, the lease term is taking up that. Let's say, for example, that you thought that the asset was going to be 50 years in life, and then 48 years was the lease term. It's like, okay, come on, this asset's only going to be around for 50 years. It's only going to have economic life of 50 years, and it's being leased for 48 years. So it's basically the entire life. So the question is, well, how do we determine what is a major part of the asset's remaining economic life? So we look at whether the lease term generally, if it's more than 75% or equal to or greater than 75% of the remaining economic life. Okay, so if it was a 100 years that is supposed to be the remaining economic life, then it would be 75 years or more. If it was a 75-year lease term, then it would be, say, okay, this is going to be a finance lease. But that's just a general rule. Okay. Now, in addition, there's also a present value test where we look and say, okay, what is the present value of the lease payments? And then we compare that to the fair value of the asset that is being leased. Okay. So we say, okay, what is the present? If the present value of the lease payments is basically close to the fair value of the property. So let's say the property had a fair value of $100,000. That's the fair value of the property being leased. And then we look and see that, oh, well, the present value of the lease payments, is $97,000. We're saying, look, basically the lease payments are the entire fair value of the assets. So in that case, we would say, okay, this is going to be classified as a finance lease. And again, the general rule is we say if it's greater than or equal to 90% of the fair value of the asset. If the present value of the lease payments makes up that amount, then it's a finance lease. And finally, the final test is we have this alternative use test where we say, okay, is the asset of such a specialized nature that when the lease term is up, when it's finished and complete, that the asset would have no value. It'd basically be worthless to the lessor. It really only has value to the lessee, and by the time the lease term is up, the lessor would say, look, what do you want me to do with this asset? There's nothing I can do with it. So if that's the case, then we say, okay, it needs to be classified as a finance lease because this is effectively transferring ownership or control to the lessee. Now, if you don't have to meet more than one of these tests to be classified as a finance lease. Remember, just one of these things, just one of these tests need to be met, plus the fact that a lease be non-cancelable. Now, if you didn't meet any of these 5 tests, then it's going to be classified as an operating lease. And again, operating leases and finance leases, in each case, you're going to have an asset, you're recognizing an asset, and then you're going to have a liability for the lease payments that you're recognizing on the balance sheet if the lease is for longer than 1 year. So operating and finance don't change this, right? So this is the case. It's just going to change some of the income statement effects and so forth, and some of the journal entries are going to be different, which we will talk about more in the videos to come.